We're here on the $yen 15-minute time frame, and this is a two-touch flag I've just got in, though we could potentially be coming back up for a third touch, so I've had to account for that. So if we just remove the orders, we're currently risking this much, which is 19 pips for this much. Let's go to the dailies and have a look at the higher time frame. Okay, on the daily time frame, what's been happening here is we're currently seeing a retracement. We've actually just passed, oh sorry, no we've not actually closed yet below this level here on the daily time frame. This daily candle here hasn't finished and won't for another 3 hours, so we could in theory hold that level and we could actually see a move to the upside. We've just also come into a 382. So let me drop down to the 240 time frame. Here is the 240, and you can see that we have actually held this area. However, if you look at what price has done recently on the 4 hour, we've actually been moving quite nicely to the downside, and whenever I see a big bullish bearish candle like this, which actually closes below the previous structure level, I'm looking that potentially the market can continue lower. The next structure level I'd be looking for is this right here. If the market was to come lower, let's drop to the 60-minute time frame. So certainly the 4 hour there confirming that we could go lower, and the 60-minute almost the same story. We've had quite a nice move lower here. Again, we've closed below the previous low. And if we zoom in here, this is quite interesting. So we've got rejection candle, and then we're currently trading here. So indecision at this point, or at least we're looking at a hold before we see a continuation to the downside. Let's go to the 15-minute. And here we go. Now you can more easily see this flag pattern. Now there is a bit of a concern with it. And typically we tend to see a two-touch flag when the market is going to continue quite heavily to the down or the upside, one or the other. And you can see here that we've got nice couple of touches either side. The problem here is that if I put a structure level on where price came to, in fact, sorry, ignore that. I was looking at this. I didn't think we'd actually come into previous structure, but we have. You can see it here, so it's not a problem actually, because we have come into that structure level. If we do drop down to the 5-minute as well, you will actually see an internal level of structure, which is why I actually sold the market. And this was it right here, this internal level of structure. And if you see what's actually happened here, look how we've held that here on the 5-minute. So I actually then entered once we'd had the lower close candle. And so if I go out to the 15-minute again, one thing we didn't do here is hit a 382 fib. So what I've had to do is account for the market potentially coming up for that. So if we look at the market making a 3 drives pattern, so there's the first equal measured move, AB equals CD pattern. We can then look at a third move coming up to around this level, and if I bring the orders on, you can actually see I've accounted for that and allowed for the market to potentially come back up to here, and a bit of room for the stops as well. Targets are in the usual place of 127 fib. So just let me bring over the original accounts that we had all this worked out on. Okay, and here is the account. So I'm just going to set an alarm here. So currently 2 pips up. What we're always looking for on these flag patterns is a break of the structure level, and here is the 127 fib coming in at the price 112.42. and if I just zoom out here, you can see that we have this structure level here, which I'm looking at taking profits at. There. Okay, so that is the trade. Hopefully we can see this thing break the channel and come down to the downside. If not, well, we'll come up for a third touch, we'll test the 382 fib, and hopefully then we'll continue down to our targets. Okay, we've had a nice breakout now in the last 15 minutes. We've had a very strong bearish candle. The only thing is we never actually put in an initial structure low. But what we've done now is broken out the channel. So what I'm just going to do is I'm going to reduce the risk. So I only need to be 5 pips above the high here. It's going to make me 88. Yep. Okay, so the risk has now been reduced. So we no longer have 19 pips of risk. We now have, oh come on, 12. Okay, so again, the reason why I reduce risk is I have 4 philosophies. This is number 2 on the importance scale. I'm reducing risk wherever possible, and the fact is now we've broken out of the channel in the direction that we want. Therefore, I am not anticipating price to break this top level of structure. Okay, it could potentially come back up. We can certainly see this thing usually come back up to retest the outer trend line, but if we went higher here, I would assume that I'm wrong and we're only getting the breakout to just retest the lows. But I do think here that we'll break out and continue to the downside. I think I did say in the video that typically this 2-touch flag in this scenario is we could break out heavily out. I'm not too sure if I did actually say that, but we have broken out quite strongly. We could see this continue. Certainly next hour we could quite conceivably see this thing rally and hit. So there's the update. And we're back, and my alarm's just been triggered. We have now come 1 pip away from my targets. So what I'm just going to do now is roll this to a couple of pips past break even. So let's have a look. Price came down to 112.42. It looks like we actually came around half a pip away from targets there. So hopefully in the next 15 minutes we can see this thing push down and hit targets. And we're back, and we've just rallied down now to hit targets. So what a lovely pain-free winner. 34 pips as usual. If you haven't subscribed, go ahead and do that. And of course, please don't forget to give it a like.